on businesses specifically offering energy storage solutions, I think we're at a precipice in the market in the sense that many of those companies had historically been of the size and maturity level that they were venture backed. But as we've seen over the last 6 to 9 months, the number of those businesses that are now reaching the level of sort of maturing out of the series round fundings and into what I would describe as more traditional private equity sort of level of maturity. Many are still not at the point where they're ready for a full sale or full buyout, but they are looking for more traditional sort of minority equity investments from traditional private equity groups. But the number of businesses that are reaching the level of maturity that I think will become more interesting or sort of more investable to the traditional private equity investor is certainly expanding. No one wants to take the technology risk. Everyone's sort of waiting to see how the market shakes out. But I think over the next 2 to 3 years, we're going to see significantly more opportunities for traditional private equity groups to actually start accessing this part of the market where everyone knows the growth and the potential, but trying to pick the winner has been more difficult up until recently.
There's definitely a strong sense of urgency that characterize the M&A and overall EPI market in Europe, and there's two reasons for that. First, the war in Ukraine that led to a huge increase in energy costs, and therefore investment in EPI stands out as potent lever to ensure both energy efficiency and ensure and generate energy savings, and that's obviously very important. Second, a near-term groundbreaking and legally binding regulatory agenda led by the European Union. This green revolution comes along with a huge investment of up to 290 billion euros, with the EPI sector standing out as a key beneficiary. Decarbonization is obviously a key theme and drives a flurry of deals, as Europe has been for quite a long time at the forefront of the grid technology development. As a result, private equity and strategic investors are actively pursuing opportunities in sectors where the electrification revolution is a game changer for future growth prospects.
The global energy portfolio is very diverse, with renewable energy being an increasingly important component of that mix, whether it's solar, wind, renewable natural gas, or other sustainable energy sources. Renewables are meeting more of our energy demands. This is being driven by improved economics for renewable energy, as well as regulation that is accelerating that growth momentum. Balance of system costs are continually improving, and overall business models have been refined, making renewable companies more competitive and well-positioned for investment. Additionally, as electricity prices continue to increase, distributed generation through renewables, and in particular through solar, has gained rapid traction, and it provides a great means to stabilize our energy costs. With the establishment of the IRA, we're in a very sustainable regulatory environment for renewables and anticipate that backdrop of support to help sustain a long-term growth trajectory for the whole industry.